Hello, everybody. Welcome back to the crypto news recap for this week. This week was all about Bitcoin, and we'll dive into what all happened. But let's just take a look at how the market is at the moment. It is quite a lot in green. We see a lot of tokens in green here. Let me see if I can find Bitcoin here. No, that's not it. Oh, here it is. Bitcoin is down, and we'll talk about why Bitcoin is down. Ethereum had a good week. Let's see if I can find Ethereum here. Hmm. Oh, here we go. Say 14.5% almost. And I think it's going to go up since there are a few narratives, and we'll talk about that as well. So overall, the market looks nice. We got a lot of meme coins and layer twos and other dApps in massive. Some of these tokens did not participate so far, so we want to see we'll be seeing some positive action on this. But let's go ahead and dive into what happened with Bitcoin this week. So, as you all know, Bitcoin ETFs, all 11 of them were approved on Wednesday, and the trading was supposed to start on Thursday. And unknowingly, because everybody was expecting that, like this is it. Now it's gonna go skyrocket, and everybody have their own price targets, 50,000, 100,000 by the end of the year, and so on and so forth. However, it surprised the Bitcoin price action surprised everybody, because as soon as the Bitcoin ETF were approved, we started seeing the price go down. So much so it had reached, I think it had reached before the ETF was approved, it was around 48,000, and now it's hovering around the 42,000 mark. So this is quite unexpected. I mean, they were all the bullish markers were in place for it to skyrocket. But why did this happen? Why did the price actually go down? There are two main reasons for it. One is the first reason is that the people who were already invested in the Grayscale trust started selling their positions, which meant that the underlying asset had to be sold as well. So if you look at, I'm going to just read this tweet here. Update on GBTC sell-off. The recent downturn in Bitcoin prices partly due to selling pressure by Grayscale GBDC and the FTX situation. But he expects the selling to pressure to be resolved fine. Remember, the FTX official has had substantial DBDC holdings and were redeeming them when the redemption window opened on Thursday, meaning FTX had a lot of stake in the GBDC. And the moment the redeeming was allowed on the GBDC holding, which was not available till before the spot ETFs, till before GBDC's its own spot ETF was approved. So now that it is approved, everybody wants to sell it and move on either to their own ETF or to some another ETF. Irrespective, they wanted to get out of that position and redeem it. So a lot of those GBDC holding positions were sold off. And that, according to them, is probably one of the main reasons why this happened. And here is the total estimated value what the FTX holdings had. I think this is the bankruptcy estate, if I'm not. Yeah, it could be related to the FTX bankruptcy uh, estate, because they need to pay their own creditors and they need capital, right? So they sold off all their GBDC holding, which in turn put a lot of sell pressure on the asset, the underlying asset, which is Bitcoin, and that is the reason why it fell down. The other reason why why Bitcoin fell down was because a lot of miners started to sell some of their Bitcoin holdings as well. The reason for that is that they were getting, I think I have it in the other news here. Yes. Yes, because they were facing increased costs. And this is the time when miners want a capital because they need to prepare for the halving, right? The halving is going to increase or double the difficulty of hashing, or rather of mining, and it's going to the mining companies would require to invest in a better rigs, and for that they need capital, right? So part of the reason was the Bitcoin companies themselves selling the Bitcoin token. So unfortunately, although the news was great and is great, the kind of price action that everybody expected was not to be seen. So that was why, that is in a nutshell why Bitcoin is fell. So let's move on to the next news, right? So although this dominated the entire week, and it is still dominating because Bitcoin drives the price action for Ethereum, which in this case surprisingly was the opposite, completely uncorrelated with Bitcoin. And part of the reason what people are saying is that I think um, people are eyeing the Ethereum ETF now. So I don't know how much that is true, but markets are irrational, right? So who knows why prices increase or what people think, and what happens behind the scenes. So, all right. So that's the biggest news of the week. But let's move on to some of the other news stories. Okay, TRM Labs, which we covered in our previous video, and the report on the 2023 crypto attacks, came out with another report in which they analyzed all the jurisdiction, all the countries which have some kind of crypto regulation either in place or completely regulated their crypto, um, or have a full-fledged crypto rules and regulation system in place. So what they did was, they came out with some findings. They said, I'm just going to read this because that's going to be better. TRM Labs reviewed 2023 crypto policy developments in 25 jurisdictions or countries, representing approximately 70% of the crypto exposure. Last year, 80% of these countries have moved to tighten crypto regulation, and almost half have specifically progressed consumer protection measures. So what does this mean? This is correlated to the fact that after the analysis that they did, they found that the virtual asset service providers, like the crypto exchanges, in countries where there were full crypto regulations and supervision, had a much lower rate of illicit activity than those which had less regulated. Now, if you think about it, it is not surprising. This is the reason why we have regulations. If things are not regulated, then it's going to lead to illegal activities, right? And no wonder why the governments across around the world are adopting crypto regulatory framework. As you know, G20 adopted the synthesis paper, and the MICA is the rules and regulation framework that has been approved in the EU, right? And in this year, as I've been saying in my past weekly recaps, is that 2024 and 25 we'll see a lot of action on the regulatory front, right? So we'll see more and more of these countries move on into the tightening of their crypto regulations. And this is good because crypto has for long suffered from unclear crypto regulations. If you know the entire Coinbase SEC saga, it still revolves around, the SEC is not clear of how crypto has to be regulated. So hopefully that will all be sorted out in this year, and we'll see tighter and much more regulated crypto markets in the world. So let's see what happens. Moving on. Okay, now this is an interesting news. For just to give you a little background, Bitcoin, as you all know, is a proof of work blockchain, and Ethereum is a proof of stake. Ethereum adds a kind of programmability on top of Bitcoin, wherein you can create all kinds of applications like NFTs and dApps and DEXs and whatnot. And last year we saw the rise of NFTs on Bitcoin, right? With the arrival of something called the ordinals, and with ordinals, people can actually create on-chain NFTs in Bitcoin. Now, what this did was divide the entire Bitcoin community into two groups. One were the Bitcoin purists, as probably you can call them, that said that, this is not what Bitcoin is meant to be. It is meant to be a peer-to-peer payments network and an asset. That is all. We don't want any kind of programmability on top of it. And the other group, which is saying that, Bitcoin is much more than that. At the end of the day, if Bitcoin doesn't add more functionality on top of it, then the network is eventually going to die, because as the difficulty increases, it's going to become difficult to actually mine Bitcoin. And so the only source of income for miners would be transaction fees coming from such applications, or user interactions with such applications. So this dominated the better half of last year, and it is a big thing. The entire community has been broken into two groups. And so now that you have this background, Luke Dash Jr. is one of the purists. And according to this report, he basically created a proposal, a change request for Bitcoin network, which although seemed innocuous on the surface, but when it was discussed, people figured out that, this is not as innocuous as it seems, and it might eventually lead to the shutting down of NFTs and programmability on top of Bitcoin. And it is, and Coindesk says, is one of the most controversial proposals to hit Bitcoin in years, right? And obviously the discussions did not yield in any results, and so the proposal was taken down. However, this is a pretty interesting situation where, as I talked about the conflict between the two groups, and this is one of the examples of how things are happening, what things are happening in the Bitcoin developer ecosystem. And not surprisingly, when Coindesk actually tweeted this report outside, Luke actually came back and replied that this is fake news, right? So, well, fake news or not, but this should give you a little bit of an idea of what's happening in the Bitcoin. But there's actually a lot more happening. We'll be talking about a Bitcoin virtual machine. We're talking about Bitcoin and EigenLayer coming together. So there's just, endless possibilities. So people are talking about all sorts of things. So I thought I'll share this interesting piece of news here. All right, moving on. Cleanspark is one of the Bitcoin miners, and this is in relation to the earlier news of miners selling Bitcoin. So Cleanspark has basically bought 160,000 Bitmain S21 miners paving way to 50 exahashes, which is the amount, the total capacity of the mining operation. And this was done, if you look at it, it was done much before the actual ETF was approved. So the idea of sharing this news with you is that, Cleanspark clearly understands that after the halving, which would be sometime in April, the difficulty is going to rise, and they need to be on top of their game in terms of having the best equipment out there so that they don't lag behind and eventually, die off. As a matter of fact, they have, in this report, they have said that the reason was that in the last bull run market, machine prices and minor rigs actually increased by 3 to 5 times as well. So that is another reason why of the timing of this purchase. So they clearly feel that we are in the early phase of the bull run. We've not hit the bull run yet. So they felt that this is actually the right time, and it's obviously before the halving. So this is the right time for them to buy the rigs, and then it's over the period of time they will incorporate those into their mining operations. So this is another news related to the previous one, but this tells you, and I'm sure there are other mining companies out there who are doing similar. And if they will be, I'll share those news with you. But yes, so things are going to get tough for miners. And on top of that, if they start losing transaction fees coming in from ordinals, then it's going to be tough for them, right? So let's see what happens. Moving on, we got a news from Polygon this time. So they tweeted this post recently and said that the institutions have arrived on Polygon CDK. And for those who don't know, CDK is the framework on which you can actually create a Polygon ZK EVM type layer 2, right? So the institution arrived on Polygon CDK. For the first time, a financial institution focused L2 is being built, settling to Ethereum. So a new L2, which is financial institution based, right? It's called Libre, and it's an institutional Web3 infrastructure for the distribution of alternative asset funds, for tokenization probably, and that's how you'll basically keep assets on chain. So this is good news for Polygon, and that adds another blockchain to the whole modular blockchain thesis. We already have more than 100 L2 projects, and this is going to be another one in the pipeline. So it's going to go live in the first quarter of this year, and yes, so good news for Polygon there. Let's move on. All right, so this is positive news. I've shared this in a tweet earlier, in a post earlier, that one of the most, besides the Bitcoin ETF and halving, the other most anticipated update or change or news or happening for blockchain in this year is the Ethereum upgrade that has been planned, and that includes proto-danksharding, as everybody knows. It's something that is been demanded by the community. The team has been working on it for a long time, and the whole idea is that it's going to further increase the speed of transactions and reduce the time of execution on the layer 2s. So Tim Baiko, who is one of the core developers in Ethereum, came out with a timeline. So the first thing will be the change will be tested on the Gurley testnet, and the timeline is the 6:32 UTC on 17th of January. And after that, we'll probably go to another testnet, and then hopefully some people feel that by end of the March, it should probably go into production live. So I just pulled up some of the information. There is a lot of other things that are part of this release. The most anticipated one is the 4844, which is the proto-danksharding one. And as you can see, there are so many other changes that are going with this release as well. So This is a big news for Ethereum, and everything goes right. And we are in the bull market. Ethereum is already seeing a lot of positive price action. And this change, if everything goes perfectly, could fuel further price rise in Ethereum, right? Because we're in a bull market at the moment. All right, let's move on. Looking at after the all the action in the US with respect to the Bitcoin ETF, a certain lawmaker in Hong Kong is also raising the demand that Hong Kong should also come up with spot crypto ETFs. Now, this is, I don't want to read too much into it because politicians have their own agenda and they keep popping up here and there, making such individual statements. And it's very important that this is just one gentleman who is speaking up, right? So this is not a big news, but I still wanted to share that uh, not just for this particular information, but for this. The regulators in Hong Kong have already published details addressing the requirements for spot crypto ETFs, meaning that they are well into the path of creating a framework of how spot ETFs should actually be created and regulated in their financial system. So we probably would see some crypto spot ETFs coming out of Hong Kong real soon. So, which is good. Another bullish sign for Bitcoin and other cryptos. So let's wait and see what happens. Okay, USDC, Circle, the company behind the stablecoin USDC, confidentially files for an IPO. Right, so this is a big news. The Circle has conditionally filed for an initial price public offering or IPO of its equity securities on the plan of becoming a publicly traded company. So, from being a private company now, if their application is accepted, they would be listed on the US stock exchange as a public company, and you can buy and sell shares of Circle. So there's not much in terms of how much the company details around the what is the face value of their or stock value of ticket of Circle, but the company was last valued at $9 billion, right? So let's see how much uh, how much do they list at on the stock exchange, but this is another good news for crypto assets. Finally, the last news that I wanted to cover was that Cosmos and Ethereum are coming together thanks to EigenLayer. For those who don't know, EigenLayer is a very unique project in which the distributed validator set of Ethereum, which comprises of thousands and thousands of nodes, can be actually used to secure other chains that are outside of the Ethereum network. So one of those chains, Cosmos, has an Ethereum and EigenLayer have come together, in which the projects on Cosmos would be able to, or rather, people on Cosmos, if they want to create their own project, can actually spin up their own projects and uh, uh, not worry about a volatile crypto, basing it on a volatile crypto asset like Atom, but on a much more stable and robust token like liquid staked ETH. Right. So it helps Cosmos and it helps Ethereum also, because the layer twos that are already on Ethereum can now move back and forth. The Can interact with the development community of Cosmos and get some of their latest research and technology, because Cosmos is known for an innovation hub, right? By connecting, let me just read through some of the lines here. By connecting Ethereum and Cosmos, EigenLayer will bring a new wave of innovations. The Cosmos community can tap into Ethereum's foremost source of decentralized security and liquidity. Ethereum can tap into the infinite experimentation happening in Cosmos. So this is great news for both the ecosystems, and I thought I'll end with this amazing news. So we'll see what happens with the amalgamation of the two systems, and we'll see. I'm surprised. I'm looking forward to what kind of interesting projects will come up because of this. So that is all I have for this week crypto recap. I hope you liked it. And I will see you next time with another weekly crypto news recap. Bye bye.